Tuesday the 19th of April 2022. You're watching Joe Trades Forex Diary. This is my journal. If it's the first time you're watching, it's my way of journaling my Forex trades, what I'm doing good, what I'm doing wrong, everything in between. I only trade USD yen. I look for zones for price to pull into and look for small fractals, which we'll go over. So you could call it supply and demand, smart money concepts. It's just, you know, these areas, order blocks, flip zones, that type of thing. We'll go over what I've looked at today. Didn't trade on Friday, being a bank holiday. Didn't trade yesterday, being Monday, also being a bank holiday. So coming to the market this morning. If this is your first time watching, I tend to only look at the chart after 9 o'clock. Just what I found works for this pair. I only ever use a 3 pip stop loss. Again, something that I found with the trades that work out, that's adequate enough. And I've also just started a demo 25,000 account just to go through trades I'm taking to show how long a 10% growth would take for my own benefit. Also, it might help others that might be struggling with trying to do it. Just also to preempt the fact that the whole reason for me doing this is I want to be able to take a challenge and be in the right mindset, have a consistent approach to the market, which I know can return the same thing over and over and over, to do the same thing every day, look for the same entries every day, and we take it from there. So with that said, we'll just quickly go to the weekly chart just to map out where we are currently. Now again, USD yen has been very bullish. Some might say it could be overextended, but it's pulled up into a very, into these wicks here. So I think I marked out and then refined it, which we'll go over. So this was the initial zone that we were looking at here. As you can see, price is pulled right up into sort of the top 50% of that. If I go down to the daily, let's just quickly have a look here. On the daily, there are several zones that price is pulled into, and at this point, when I was looking at the chart, price was up into these top wicks. Now I believe on the you've got this zone here and this zone here, so we'll come back to that map a little bit later on. Anyway, so predominantly on the daily, as with the weekly, we are still very bullish. We're having daily closes above higher highs, creating higher highs. On the 4-hour chart, what we have got, so just putting the daily, so the daily sort of low is down here, so we're very far away from that. On the 4-hour, we've had this, I'll try and make this as big as possible so it's clear on screen, because where I've been watching some of these videos back, the candles just don't look big enough so you can't see what I'm doing. So price has pulled up into this 4-hour zone. We've had this as the last candle that's had a close below, and then we've had price here break above, close above this candle, which means this is the swing low that we're waiting to see price close below to really indicate that price has turned bearish. So at the moment, we're still very much bullish, looking for bullish moves. However, I'm, again, because of the zones we're pulling into, looking at initially some counter trend trades, which then may turn into confirmations that the overall trend has changed. So that's the 4-hour view, that's the 4-hour range low, range high here. Drop down to the 15-minute. So on the 15-minute, this is what we've had, and this was at sort of 8:45, so just play this forward. So on the 15-minute, what I've mapped out here, let's come back a touch, is this big move. So we've closed below here, all these stops, and then when price had this candle form and close above, that cemented this range low. So that is the bottom of the range, and then price is pulled up. So again, today when I've been looking at the chart, overall bias is bullish. However, I was looking for any potential counter trend trades You know, ideally, if I'm looking for a long trade, I want price to pull back into this lower zone first. That would give me the highest probability and lowest risk entry of a further move up. So what we have formed is these, you could call it tweezer tops, but these 2 wicks here on the 15 minutes. So on the 1 minute chart, this is what this looked like. And when I was down on the 1 minute chart, obviously we have had a change of character here. So price pushed up, closed below here. However, given that we had sort of relatively equal highs, I wasn't entirely happy to look for any trade there. I want to see price pull up into this zone first before I looked for an entry. So price taps into this area here, and my entry, he says, my entry was, there we go, for some reason that got thrown off because the risk to reward got moved. So 41, that was that. Okay, well, there we go. So let me just make this a bit bigger so it's a bit clearer. So initially price has pulled back up into this 15-minute point of interest. We've had a change of character here, so just mark this out. So we've got the move up, then we've closed below here, so that being the solid body close below. Again, different people use different candles to mark out their own breaks of structure and their change of characters, but this would qualify. Now what I have done is used 50% of this whole candle. So again, if I can just reposition this so it's a bit clearer, we've got 50% of this candle body, and that would give us 41.6 or 41.4. So I round it down to the nearest round number, which would be 41. So as you can see, price pops down, pops up, tags us in, and the trade is away. So that was the entry of the trade. So just play this forward a little bit. So as you can see, price did start to move back up. Again, one thing I'm very, very aware of, being counter trend as well, is that we're creating equal highs here, equal highs here. We'll just draw those in as we go along. So we've got potential, stop losses sitting here. At this point, I've not changed my stop loss. That's where this blue line comes into play. So we've got price playing out. So as we're going along, it comes right back up as well, very close, and price has taken out liquidity there. It's taken out liquidity there. So my stop loss is still at 44, so the 3 pip stops there. However, at this point where the blue line is, I've moved my stop to break even. The reason being is price has moved very close to the entry. We've taken out liquidity already, and we've not really broken this structure here with any sort of real strength, which I would have wanted to see. So this is just sort of safeguarding myself. We see the break there, so at this point I'm thinking, great, price may continue down, my stop's at break even, everything's covered, and we carry on going, and then I get stopped out. So I'm stopped out for break even, no problem. I think the trade itself would have went a 10 to 1 easily, 11 to 1. Certainly, I think the overall target was 17 to 1. Let me just walk you through why on that. So on the 15 minute before this happened, I was looking to exit before this point of interest. So as I mentioned, this is a counter trend trade. If I wanted to get long, which I sort of did from this point, I don't know how price would react in this point of interest. Now, I could have targeted these lows as being the low that's not been able to take out this low, or certainly this low here. However, the overall trend is bullish. I wanted price to get out before we got to the point of interest, just so I could see how it could react, because potentially there could have been a setup like this, but bullish, to go long. However, prices continued on and taken me out. So we've got that there. So as price has now invalidated that area, I went back to the daily to see where these other zones were, and if I put on the map, there we go. So this was the first set of wicks this zone denotes on the daily. So again, looking at what happened, price pushed up, and what I then was looking at is the wick of this candle. Now realistically, I should have just probably left the charts alone, had me trade, should have just walked away, but I was determined that the price was going to be, there's going to be a bearish reversal and I could get in. So, you know, hindsight's wonderful, but it is what it is. We're going to go through what I looked at. So wait for the 15-minute candle to close, found that wick could be a potential area of interest. Again, we've taken out liquidity on that equal high. So again, that was always in the back of my mind that those were very much equal, not ideal for what I need to look at. But however, other rules were met. So this is the 15-minute point of interest. We've got price that pushes up into here. Price starts to push down. And again, what we get is another change of character. So again, just doing the same thing over and over. So we've had a high close here with that candle. We've then had price close below this candle here. So we've had a change of character. And then I was targeting the body. This is the other thing I've picked up today. So it was this body here of this candle. So trade 2, where are you at? I was looking at 50% of this candle. That was 685, so I went for 128.68 again, rounding it down. 3 pip stop. Price tags me in, gets very close to stopping me out, doesn't quite stop me out. Starts to move away. And I'm pretty certain, I think did the spread stop me out here. So again, trade 2, that's -1R. So we've got that happening there. Let's just move this across, it's a bit neater. And then there is one last trade. So that's a 20-1, so I was, again, price pushed a bit higher. Was thinking it might go a bit lower. Never did. And then, what was the, so prices, yeah. So price had pushed down, pulled back up. Where's trade through? Just trying to get the bearings here. Here we go, yeah. So, price push back up. Now, these boxes I've put here, so I'll just enlarge this for you just so we can see. It really could have been 2 trades, because what I didn't do on the first trade was consider including the wick of this candle. So you can see if I had the box here, included the wick as well with this last up candle, it may have been the shortest, you know, an extra pip may have kept me in a teeny tiny bit, a little bit longer. But again, as price sort of pushed up, broke structure, again we broke the low of this candle, went for 50% of this candle, got tagged in. Irrelevant really, because price eventually pushes a lot higher. So that's where we are. So prices pushed up, it stopped me out. So yeah, there you go. So the break even, a -1. Again, price action doing what it was doing, and a -1. So that's where we are at the moment. Obviously, price has now invalidated this daily zone. It's invalidated that point of interest there. So again, overall, price is still very bullish. Again, I don't know. Let me just wipe everything off. So on the 15-minute now, I don't know if we've created much else. So as we can see, we've got this range and this range. So we've had a change of character here on the 15. So this potentially, but again, I'm not going to look until tomorrow morning now. So all of this is pretty much irrelevant to me. But just to get an idea, we've had a change of character here with this candle just popping through. And then you've now got the top of that wick as a point of interest. That's just below a daily zone, so we don't know, price may pop up through. I'll put some screenshots up now of the trades that I've taken on the demo account. So what we will see on there is that we've got the break even. We've also got the 2 losses. So again, I'm using 0.1 risk, which is 10%. So as you can see, you've got 24.47, 24.47 once they take the commission, the spread out. And then when we look overall at the moment, so we've had a win from last week, which was the first trade on the account, which was a plus 16R, 1 break even, minus 2R today. So now we're sat at still plus 14R. So overall, still up $331, pounds, whatever it may be. So nothing really to worry about. So essentially means that I would need to now take 13 losing trades to get the account back to break even. Obviously, I'm hoping that doesn't happen, but we don't know what the market is going to present, and also what my frame of mind will be if I feel that there's still a valid reason to continue after a trade has lost. The only reason I did that today is one was break even, so the next trade I was only risking 1R, so overall 2R risk isn't anything that I'm concerned about. I can do that. I can live with that, essentially. There's also a book that I've been reading called The Psychology of Money, which is very, very good. Some very insightful pieces in there. There was a passage in the book, which I can't remember which chapter it was in, but it was all about never enough. So it was all on about how people have got too greedy, and where, you know, things, you know, when is enough. And that's the other thing to consider when we're looking at trades is the risk reward, is 1 to 10, is 1 to 5 enough, is 1 to 20 enough, is 1 to 50 enough? It all comes down to what we feel ourselves is adequate. And this is the challenge with trading, is that we're always wanting more. If it's to show off, if it's to show people, it's to rub your ego, to make you feel like, yeah, I must be doing 100R trades. That's what all these people on YouTube are doing. And if I'm not doing that, it's, you know, it's irrelevant really. It's what's going to work for you. And there's another passage which I found as I've been waffling. It's about having your plan and sticking to your plan, but the passage says, in fact, the most important part of every plan is planning on your plan, not going according to plan. So think about that for a moment. It's having your plan, but being aware that your plan might not always go to plan every single time. So I'll leave it there because I'm just waffling on. We'll come back tomorrow. We'll see what happens. We'll see if anything plays out here. Ultimately, the area that I want to see price really react to is going to be down here. So if this area on the 15-minute can break, that will be interesting to see if we're going to see some turns on USD yen. And then the last down close, so on the 4-hour, I'm looking at 126 sort of 30 level. If that can be broken, then there possibly maybe a pullback, then price might go, or it might just come crashing through. Anyway, if you've enjoyed the video, please like, subscribe. If there's things you've taken away, fantastic. Hopefully the videos will get a bit more constructive as I go through, but for now I'll leave it there and we will come back tomorrow.